Morning, everybody. How are we all doing? Sorry, I'm late. I was just setting up the EA for this morning, and I just suddenly realised yesterday I was mucking about. I was using another development version of this position trader EA yesterday, while I was doing the testing, which was trading this 1 minute RSI strategy that we're going to look at this morning. And I suddenly realised yesterday I had two version 1.9s of the position trader EA. One was called version 1.9, one was called version 1.90. And I deleted one of them yesterday. And it's the one that was running. And I was trying to figure out this morning why we haven't taken any trades. And I deleted the EA. So I'm just quickly whizzing through and just setting up the EA on the chart again, because I've deleted it. Which is no good because I want some trades on for this morning's session. So hopefully we get some nice movement at the open, yeah, it will take some trades. Let me just get this set up 1 sec. Template default, won't take a second, haven't got many to do. Morning everybody, by the way. Default, US dollar yen, done. Okay, so we are live. This is version 2 of the EA. The new version. So I'm just going to set this running. It'd be a good test for the new EA actually, because I haven't live tested it yet. 93.45 RSI. So we should be getting a short trade on New Zealand dollar yen at some point shortly. So we should see some action coming through in a minute. Let's pop that out there. Right. Morning, Mark. Morning, Lucas. Morning, Danny. Morning, Leon. Morning, Evil. How are we all doing? Let's whiz through the news and everything to start off with. God, I'm all over the place this morning. That account. Right. News. So, where are we? Overnight news, not a lot. Basically, Trump, as usual. So Trump basically decided that Ukraine actually started the war yesterday. Got some good backlash about that, he has. Even from the biggest Trump supporters, they are all completely disagreeing with him. I'm not quite sure what the hell is going on. He's obviously got some kind of brain malfunction at the minute. He's very old, actually. So could be dementia. Who knows? Morning, Barry. But yeah, basically, loads of Trump stuff overnight. Nothing really impactive regarding tariffs and things. There was more talk about stuff, but nothing's getting done. I think the market's kind of calmed down a little bit now, and it's like, right, okay, well, we've heard you say stuff about tariffs before. You're going to sign any pieces of paper? If you're not signing pieces of paper, we're not really going to listen to anything you say, because all you've done so far is cry wolf and do nothing. So I think the market's sort of softening a little bit at the minute. He will sign some papers at some point, though. So we'll have to keep our eyes peeled. Main news we've had overnight has been Australia. So the CAD CPI came out yesterday, all up for, so it's all bullish for the CAD yesterday. Sorry, Wednesday that was, wasn't it? No. So we had all the news yesterday, didn't we? So it's FOMC last night, which didn't do anything. So overnight news, we've had Aussie dollar unemployment at 4.1, came out as expected. Unemployment claims this afternoon. So there's not really a massive move this morning. ADRs, we've got Euro odd. I was just looking at this one for a potential long, which has already given a reversal alert. And in there as well is kind of a little 3-bar reversal. Not a very good one, because there's a hell of a lot of selling there, but there is a reversal, just about. Then you got the reversal alert, and you've also had the retest. So potentially we are now looking for a retest of propulsion and a long from there, if you want to take it. So Euro odd is an ADR this morning. US dollar yen's an ADR as well, but obviously the market's just opened. So nice ADR reversal there, beautiful. Reversal alert, retest, off we go. That is an absolute textbook. Doesn't get any more textbook than that. And it's at support. And it's at 150 support as well. Look at that. Doesn't get any better than that, does it? 150 support, big round number, ADR hit, reversal alert, and retest. Perfect W pattern. If that candle there had been up there, that would have been a 3-bar reversal as well. but it wasn't. Anyway, so yeah, lovely looking long opportunity on US dollar yen off of 150 support, which is the previous intervention level. So those are your ADRs today. Overnight news has not really been a lot. Tax cuts to include 100% expensing for new US factories. So basically Trump's trying to get all the manufacturing done in the US and not import anything. So he's basically saying if you start up a new factory, we'll pay for it, which is great. Tesla's going to love that. Obviously, Elon Musk is now just going to roll out factories everywhere. Reciprocal tariffs on countries with unequal trading. Again, this is all the same stuff. We've heard this before. You're not doing anything, and when you say you're going to do it, you change your mind the next day. So until he actually does something, we kind of have to mean revert everything he says. 15% tax on products made in the US, which is obviously it's going to be cheaper to buy US. It's all about making America great. Obviously, we'll significantly cut taxes on domestic oil and gas, i.e. we'll put 25% tariffs on all the the oil that we get in from Canada. Everything you buy from US oil producers will be cheaper. So again, all US based. Tax cuts to be extended, blah, blah, blah. So it's all just talk, basically. Apart from that, there was no other news. Obviously, today, Bostic, that was interesting yesterday. You know, I was saying, morning Ace, about the fight we've got coming with the Fed. Powell basically being told you need to drop the interest rates by Trump, and Powell turning around and saying, we ain't dropping anything until the inflation figure comes down. And Trump's like, no, you are going to drop the interest rates. And Powell's like, we're not going to drop the interest rates. If you don't drop the interest rates, I'm going to sack you. Powell can't do anything about it, can he? Bostic came out overnight. Business leaders say that their first best choice is to pass tariffs to the retail price. So again, this is the Fed fighting against Trump at the moment. Everything that Trump says about these tariffs, for example, Canadian wood import, for example, just as a simple one, 25% tariff on everything that comes in that is Canadian wood. Every company that manufactures furniture in the US will place 25% increase on their costs. Yeah, this is what business are saying. If you adjust these tariffs, we will pay more for our raw materials. We will have no choice but to pass it on to the consumer. By doing what you're doing, all you're doing is making every US citizen poorer. That isn't going to help your approval ratings, and it is not going to keep you in as a president. So, you know, this is the thing we've got at the minute with Trump. It's like, I'm going to do this, and everybody goes, holy crap, buy the dollar. Oh, no, don't. And then it's, holy crap, sell the dollar. Oh, no, don't. All it is just complete mean reversion. We did a whole session on it in the members group, didn't we? But it's just fighting, infighting everywhere at the moment in America, and everybody just thinking, what the hell are you doing? So overnight news is always going to be dominated, I think, at the moment by Trump, but there's nothing else happened overnight apart from the Australian unemployment. There we go, Aussie CAD, ADR. So there's another one just got in there, Aussie CAD to the upside. So potential good short opportunity, drop down, wait for some kind of reversal to come in. Weekly, we've already looked at Aussie New Zealand. That one played out yesterday. You couldn't get on it because the weekly hit was just bang, bang, straight away. That was your week range, gone, done. Now we're back to 50%. The RSI dash, there's tons lit up now. It's all yen, look. The yen, if we look at all the yen pairs, really big, strong push. So we've had this strength in the yen over the last week where we've had continuous lower highs put in. We've now just broken out, so the structure's officially broken to the downside on all the yen pairs. So all the yens basically, morning Chris, are bullish basically. So big strong yen at the minute. So every single yen pair is this morning an RSI extension on the 4-hour and the hourly. There's a couple that haven't made it onto the 4-hour yet. That's at 25.1. It will be in a minute. And the Aussie yen 25.25. So basically it's all about the yen at the moment pushing down. Now obviously the swaps on the yen at the minute are long only. It's expensive to go short on the yen or everything against the yen obviously because it costs too much money. So if you think that this is going to go back up again, this yen, this is a great spot to be buying. All these yens are really good buys at the moment. I'm really tempted to take a couple. So we're just going to whiz through these quickly this morning, because obviously these are the only real opportunities on RSI at the minute. This kind of double bottom we had on the Aussie yen, this is the monthly, double monthly low. So this is your November and December and January lows, both in the same place. We broke down with a little price discovery move and failed. Then we tried again and we failed. So we've pushed up again into this propulsion gap where they were selling, and we've resold it. Now we're pushing down again. We are possibly here creating, we've made a new higher high, so we're possibly creating a higher low here for a move back up to come up and retest these areas. So Aussie yen does, Aussie US just hit as well, so more Aussie movement going on. This does look like a very nice little long here. 4-hour RSI extension, it is extended as well. But if you look at what it's doing and what it has been doing since November, is this. Yeah, and we're right down at these lows right now. So this looks like a lovely long opportunity. You're going to get paid to hold it as well. The only downside is obviously we still don't know what Trump's going to do. There's this thing with Ukraine and Russia at the minute, which has got the potential to cause massive instability financially, worldwide markets. If that happens, the Swiss franc and the yen are going to power up like crazy, because everyone will pull the money out and put it into safe haven. So Swiss, yen, gold, all going to benefit. If that safe haven run starts, we are going to see something like that going on for weeks. So it's a good looking long, with the caveat of it might go into a squeeze. But if it goes into a squeeze and you're being paid to hold it, it's not the end of the world. You just got to be able to survive it. So they're good looking opportunities, all of them. That's Aussie yen. CAD yen, again, it's a beautiful little hammer going in. That's last week's low, previous week's low. This is the previous monthly low and the previous monthly low. This whole level, it's all holding at the minute. And we put in new higher highs again. So there's your W pattern reversal. This is the higher low potentially in the range. So looks really good, the CAD yen for a long as well. Good levels. Swiss yen, we are rejecting at the previous 2 weekly lows. Nice hammer going in. Good potential push up. This is a little bit weaker because it's a safe haven. So you've got a safe haven and a safe haven. Morning FTNet. We've also got the euro yen as well, which is putting a higher low potentially as well. So these are all really good looking opportunities for longs. Monthly low, again, holding. Yeah, so it's a good support area on all of these. So I'm tempted to try one. I don't really want to try the US dollar yen, because the US dollar could do absolutely anything at the minute. The CPI number's just gone up for the pound, so there's a good chance that we're not going to drop interest rates in the pound in the future. So, and if anybody at the moment is dropping interest rates, the pound is probably going to benefit most. So this does look to me like one of the best opportunities to take the pound yen. Swaps are great on it as well. It's $12 swap to hold it. So I'm eyeing that up. And it's, I mean, you just had a reverse alert going on the 5. So, I mean, it's absolutely spot on right now, actually. New Zealand dollar yen, it's not as nice as the rest. I don't think. It's just not as nice looking. The levels, we've broken down this monthly low and we've held it for quite a long time. We've tried to bash up above it again and been pushed back down again. So the New Zealand is the weaker of the lot. And obviously the US dollar, we are at 150. So this is previous intervention level on the US dollar, which we are very respectful of. The question is, have we got the power in the US dollar? Trump is really not doing a good job of rallying the US at the minute. So this, although it's got technical lovely levels, it's a hell of a lot more bearish than the rest look. So of all of these, for longs, for holding a swing, the pound yen, I think, is probably the nicest one that I like, or euro yen. But euro's weak at the minute, so that's the one that's sort of coming out on top. But there's every single one of these is an RSI extension. So, you know, this is a great example of exposure and why we keep an eye on our exposure. If you are using any kind of EA to trade any automated system and it's on every single pair, you are going to get into 1, 2, 3, 4, 5, 6, 7 trades long on the same instrument. And if that powers up for 3 weeks, you're stuffed. So you've got to keep your eye on exposure, obviously. So lots of opportunities there. So they're all available on those yens. So I'm toying with the idea of taking one. I'm going to be adjusting. God, I've got so much to do today. But I'm going to be adjusting the H1 RSI account. It's not taking any trades at the moment. This market's not ripe at all for RSI on single time frame. So I'm going to have to swap back to multi-time frame. So I'm just going to do some analysis this morning and decide what to do. But I'm probably just going to switch back to H1M5 for the minute, or H1M15 maybe, because I'm just not getting any entries on. We are, with the RSIs at the moment, we are literally just tapping into those levels on most instruments, and we're not holding. There's one there, but this is a while ago. But you know, we're kind of flip-flopping around, just tapping into the 30, or you know, just hitting it. That's all we're doing, like this, and you're not going to get any trades on like that at the moment when it's doing this, when it's so range bound everywhere. Market's just in shock with what Trump's up to at the minute. So I think it's time to switch back down onto a lower time frame and go back to multi-time frame. So I'm still going to use H1 RSI extensions. And I think I'm going to have to use 70-30 because we're not getting any 80-20s. They're rare. But using 5-minute reversals or 15s maybe, just to get some exposure on, because this account at the minute is really struggling. You know, it's just not getting any positions on. I can't bank money if I haven't got any risk. So, you know, this is just not enough. So, right. So we whizzed through the zones this morning. I'll have a look at see if there's any opportunities to grab anything. So in 3.3% drawdown on the zone trader account at the moment. Banked 1.2 yesterday, 0.17 banked this morning, which is a New Zealand dollar CAD. We'll look at that, which is this one here. So New Zealand dollar CAD got out of this morning there. So that was that high, previous high resistance. We hit it, rejected. It's pushing back through, or trying to push back through again now, but I'm out. So shorts are too expensive, so I haven't flipped short on it. Looking for a new long entry. And for me at the moment, I think I'm going to leave it just where it is at the moment and just see what happens over the next day. I might look at re-getting in here and seeing if we can, because we've got a low, a high, a higher low. If we put in a double top or triple, quadruple top, whichever one you want to call it there, there's a chance that obviously we will only do a 50% retracement and continue that leg up and then start to break out to the upside. That's going to need the Canadian dollar to weaken. 25% tariffs is certainly going to do that, isn't it? So that is an area I'm looking at, but we'll see what happens, whether this breaks through. Because if this breaks through, then obviously I'm going to readjust my next long on it. Right, so go through all the zones. That's everything there covered. Let's see what the indices are up to this morning. DAX is breaking down at the open. Fairly good day yesterday. This ORB V2 strategy, I've been watching this like a hawk for the last few days, basically. So this day here, if you go back and look at the live streams when I've looked at this account, every single day virtually, that was a massive $2,000 profit. That was about I think they got up to about 3.5% profit, something like that, in the morning. And it gives so much back. Basically, this day here was one of those days where we get every single break fail. When we get every single break win, we get an 80% plus day. Obviously, this is using very high risk. It's not normal risk, but it's in testing. So it's just trading, basically. I'm interested in functionality, not profitability. So you can equate that to, say, 8% or 3%. Yeah, it doesn't matter the numbers. What it matters is it overall making alpha? So, you know, good days where we get nice clean breaks on everything, we're banking huge. And quite correctly, the days where we get losses on everything, we are not taking as much as when we bank. And then we get in the odd day where we're getting these sorts of days coming in. I'm seeing so many days this generate profit and then give the whole lot back. So as I said the other day, I'm going to rewrite this for MT5 and I'm going to test this with a money management system that basically will bank profit when it's got it, because it just gives it all back. If we've done DAX and FTSE, and DAX and FTSE have made 5% or 3% or whatever it is, stop trading. Do not trade the New York session, because this was a profitable day of $2,000. Yeah, New York session, clean break, loss, clean break, loss, bang. All of a sudden that $2,000 is turned into negative 174. Absolutely no reason to give all that money back. So there's options. Reduce risk. If you've got a $2,000 profit in there, take a third of the risk on the afternoon if you want to trade the afternoon, or scrap the afternoon. If the morning's not been profitable, let's go for it in the afternoon. Yeah, so there's all sorts of things we can do. It's about making money, not about, because you can't predict the open. The open is volume and momentum. You can't predict what it's going to do. But if it's done what the strategy does to make money, you stop. That's the thing that this is lacking at the moment. And I need to test it multi-currency, because it's got to make decisions each session, morning and afternoon, based on what's happened in the previous sessions. So it has to be able to trade 5 different instruments throughout the day, and the only way you can test that is on MT5. So there's no point in me running portfolio analysis on this and doing a back test and then putting all those together in a spreadsheet, because it's not going to make the decisions in the day which it needs to make. I can get the individual results, no problem, but the individual results would be different if you're making different decisions based on your previous profits. So needs some work, but it's got a lot of potential. I'm seeing so much money coming in on it, and then it just flooding back out again. Over trading, big problem. I think partials on ORB V2 1-to-1 would help reduce drawdown. Yes, partials would help, but it's not reducing drawdown. It's removing loss. It's not got a problem. Making money is not the problem. The ORB strategy, whichever variation of it you trade, makes money. What the problem is giving the money back by over trading. So I don't want to get to 1R, take 50% of it off, and then it come back and stop me out for break even. I've missed 50% of the day's profit by doing that, and all I'm doing is giving half of my profits back to the market. What I want to do is let the trades play out in the morning, see what the overall net result is, and then make decisions based on the overall net result. Equally, if I've got a target of making 1.5 to 3% a day, or whatever that may be, and this thing moves and makes 0.75%, and this thing moves and makes 2.25%, I need to close the lot now, bank it all, because I have seen so many times this thing sitting in 3 to 5% profit, and then it just whizzes straight back and hits the stop loss. As we know, trading the stop loss will reduce the risk, but also it will trigger the stop loss if it pulls back and then continues. So that trading stops, we've done the analysis on trading stops. They do not help the strategy at all. Banking money is what helps the strategy. So there is an option though for taking a partial, and obviously I can test that, but I need to test it across all instruments. It's not something I don't think we can do on an instrument by instrument basis, unless we decide, screw it, we're not going to bother trading multiple instruments. You just trade the DAX. But you're missing out on all the rest of the opportunities for the day then, aren't you? So, and if the DAX doesn't work out, you're going to miss the opportunities for making the money back on the DAX that you lost and generating more revenue. Swings and roundabouts, everything, isn't it? It's just testing. It's all about testing. Maybe reduce from 3 breaks back to 2 breaks. Only takes 1. At the moment, it only takes 1 break though. This is the thing. It's it's only going long. It's only going short. That's it. it takes the break that is the correct range size. Yeah, there's only one short going on today, and it's here. There won't be any more shorts. There could be a 30-minute short if it's stopped out. But I want to take that 30-minute short because it means that it hasn't gone anywhere. So we're waiting for it to go somewhere, and that will happen in the New York session. You know, it's just about finding the momentum, isn't it? Right, we'll come back to that in a minute. Let's get the zones done. Right, so I'm going to whiz through them all. I'm going to go through fairly quick this morning because we did them all yesterday. If they haven't moved, there's nothing to do. So Aussie CAD, zones are in place. Next short is going to go on now. So in the next 30 minutes, that's going to take the next entry. If obviously it closes above that level, if that turns into that candle, it's not going to get in, but then I don't care because it's coming down. So Aussie CAD will be getting into a second short, hopefully on that one this morning. Aussie Swiss, couldn't get my long on yesterday. Yeah, waiting for it to come back into support. It hasn't. It's not going anywhere at the moment this week, so I'm just going to leave that for the minute. Aussie New Zealand, shorts on, next entries up at those longs, target at the lows. We are still where we are, nothing changed. Aussie dollar, US dollar, got 2 sells on. Third sell is in place, ready to go. Target to the downside. This is this week. Nothing's changed. CAD Swiss, long on, nothing's changed. Yeah, we're just not going anywhere on a lot of this stuff, so there's not a lot really to do with any of it. Short, I couldn't get on the Euro odd. Unfortunately, it's gone without me, so I need to move that zone. I mean, we're breaking out to the downside now, so watching this area here for a bounce back, and then I'll be watching that area and that area there. So this accumulation break here, which we retested, we kind of popped around a little bit, broke it, came up, retested, came up, retested, came up, broke it, retested, came down. So this area here is of interest. So that's where I'll go, which is a 50% retracement on that leg, assuming that we bounce out of this area here. So I'll leave that in place there. So it's the high, this double top rejection out of this accumulation. So accumulated, broke, retested, dropped. Euro CAD, short on, not gone anywhere. Target to the downside, upside. Next target is in propulsion. Euro Swiss, next buy almost got on. Didn't quite manage to get to it. So yeah, looking for a next buy down here if we can get down here. Target's miles up at the minute. Probably not going to wait until it gets there. Euro pound, looking for shorts. Haven't managed to get anything on. It's just not going anywhere. But same thing, looking for this previous area of resistance for a short. Euro New Zealand, have a sell on at the minute. Oh, I didn't set a target on this, did I? That's where I want to get out, really. So what I'm going to do with this, this is the rejection area that I was eyeing. So what I'm going to do is I'm just going to stick the zone on top of this candle where we are right now. So as soon as we break up and go bullish, if this area holds, basically, I will exit that. And then I'll get in again up here somewhere. this little bit of accumulation here, which held, and we got a bit of accumulation in there. And then we came and retested it and resold it. So if this is going to continue down, just go and then get me out when we get any kind of bullish price action. So take profit on that one today. Euro US dollar, shorts on. So I've adjusted the zones on this, obviously, so that if we do push up again, I will get a third short on, but we're not going anywhere. We're going in the right direction. We're just not going anywhere fast. Pound odd, again, sideways, looking to get in somewhere down here. If it pushes down, if it pushes up, and we can get out. Pound CAD, have long on. So this one's working out nicely at the minute. It's really difficult to pick a target on this. So there's a couple of areas of interest that I'm looking at. This is what I was waiting to break, this area here. So I was waiting for this area to get broken, which it looks like today we're probably going to do. So next level of interest is here, which is basically the additional sells on that propulsion move. So either that is going to hold and we're going to come down from there, or the sellers that started that move are done and we will probably get a reaction at it, but we're going to break back up and test this propulsion gap. So this whole thing is a propulsion gap. So from a sell perspective, anywhere in here is a potential target. Often they get filled 50%. So that is a logical thing to do for an upside target. It's not far away. So what I'm going to do is I'm just going to go with these highs here, and then just use 50% of the propulsion gap zone. Eager target would be there, but you're probably looking at next week to get there, unless we've got any news which is going to move it this week, which could be tariff related, you know. But I will go with that, and obviously if we get any price action up into there, then I'll get out. It's just a single entry, so it won't be a lot of profit, but that's what I'll be looking at. So just going to move it down so it encompasses these highs here. So that's the target for that one. Did I put a new downside? I've got a new downside on it. Pound Swiss, not going anywhere. Zones are in place on that one. That was one I had to go out to the 4 hour to find a new area of interest. So that's really all I can see before we get up to here. That's too close. Actually, that's... oh yeah, that's my upside target. Yeah, so that... yeah, so that upside target we rejected, excuse me, got itchy nose, yesterday. If that goes out today, we're going to be up in the area of interest that I'm looking to get out of. So up there somewhere is going to be my exit. Pound US dollar, got three shorts on this one. So this is one that's in the most drawdown at the minute. Next entry is going to be up there. So nothing's changed this week so far. We had that little rally up and we've just been sitting around all week doing nothing. So can't do anything with it. New Zealand dollar CAD, exited this morning. So new entry down there. Don't need an upside target because we are only looking to buy. So that is where I'm looking to get back in. However, I'm watching this area, as I said, if we get to it. So that is a nice looking potential long. If we look at how much we're actually moving in a week, the vast majority of the time, that's quite a big week, isn't it? This week's been quite small in comparison at the moment, but obviously we are only on Thursday, so there's this potential for more upside on it. So if this does break up today, that's where I'm going to put the zone. I'm going to move it up here, and then look for that kind of movement. New Zealand dollar Swiss, looking for longs, haven't managed to get down there. Just looking for this area to get retested for an entry long. New Zealand dollar US dollar, next entry is going to be above that high, so I'm looking for them just to come and retap that high and come back down again. US dollar CAD, it is moving upside. We're now back into propulsion. So are these lows that we broke going to hold? lovely 3-bar reversal, or not. At the moment, we are holding. So yesterday we hit resistance there, which is where we added the second part of that order. We tried again this morning, couldn't get through. However, there's a load of wicks to the downside going in. This propulsion move here is being added into as well. So the battle lines at the moment are right here and this whack in great order here. So we need these guys to have buggered off basically, and we should be able to pop through that. And then we're going to hit all of this accumulation and balance. So this looks to me like a price discovery move to the downside, which at the moment doesn't seem to be holding, which would indicate that we're going to come back up into balance again. But obviously the whole emphasis of this currency pair at the moment is trade tariffs. If the trade tariffs happen, it could easily do that. That's what it did last time. Yeah. But Justin Trudeau will basically combat it. So it'll be a get out quick before that happens, probably. So we're just waiting for news on this. But it's stuck at the minute. It's in a grindy, nasty mess. US dollar Swiss, 2 longs on. I took one off yesterday down here. So I need to put that back on again. Yeah, so euro, sorry, I forgot to cover that on euro US dollar as well. So euro US dollar, remember I took off yesterday as well. I've replaced the zone where it was, which was there. Yeah, so all I've done is I've taken that profit off, banked it, and I've added the zone back in exactly the same spot I had it before. So if we come back up now and we get another entry on, I can take it off again. And the same for the US dollar Swiss. So took that long off. So I need to replace the next buy. Same place. So again, if we do come back down again, at least I've banked. I didn't bother to do any drawdown control yesterday, so we'll see where these go. So these yens, obviously there's a buy opportunity on all of these yens at the minute because they're also really extended on the hourly and really extended on the 4-hourly RSIs. And obviously we're being paid to hold them. So there's good opportunities for longs here. So I'm tempted. And as I said, pound is the one I kind of like the most at the moment from a technical perspective. It's holding these lows quite nicely here. And if you look at the actual sort of interim structure on this, we've got this low here basically. So we obviously rejected this level. That's where we started the rally back up again. When we came back down to it, we rejected it again. So they rebought this area. We came back down here and we tried to blow through it as a price discovery, and that again got rejected. And now we are putting in potentially a higher low. So the trouble is, it's a really tricky one, this, because you've got this area here, which they kind of chopped around a bit, but as you can see, overall, this is a very bearish area. So what we've got is the bulls attempting to get back long, and this is probably where they would take a second run up, but we are hitting this massive headwind here. And it's put a new lower low in. So market structure on this is actually still bearish. We know it's bearish. The yen is very strong at the minute. So it's a very tricky one. There's an argument, very much an argument for both cases on this. But I kind of like the idea of having some yen long on. So I'm umming and ahhing, as you can probably tell. I really like the CAD yen as well, but I don't want to stick anything on that at the moment. The pound is also, the other advantage of trading the pound at the moment is the pound is the least likely to get trade tariffs from the US because we don't export anything to the US. So he's not going to put any tariffs on us because there's nothing to tax. So all the other countries import a lot of stuff into the US. We do import stuff in there, but you know, it's no point in taxing us. It's like saying, I'm going to open up a trading account with $100 and I'm going to look to make 10 million. You're not going to do it. If you've got 10 million, yes, you probably can. we don't do enough business there. We get more from the US than we send. So financial services is really our only export. So I kind of like that one above all the others. But I mean, Euro's just very weak at the moment. That's also in a good spot. They're all in a really good spot. Swiss is in a lovely spot, but it's a safe haven. So that's the one I like. So what I'm going to do is I'm going to place a buy zone here. And I think I'm just going to get in on a long and see what happens. So the second entry will be down here. What's ADR on this? Pound yen is 200. Yeah, so the next entry on it, if this doesn't hold, will be a double bottom of last week's low, which will be that kind of move. So I think that's probably what I'm going to do with it. So I'm just going to move this forward a little bit. So that's my only yen pair. I'm only just taking the one. And we'll see where we go with it. Make sure it's all set up correctly. Yeah. There we go. So we'll have a crack at the yen. But very, very cautiously stepping back into it. Right. And obviously any RSI extension will trigger on the yen at the moment anyway. So you could use just the position trader EA using RSI extension, and that will get you in as well. Okay, there we go. So there's not a lot else really to bank there at the minute. I've got the Euro New Zealand, which is going to hit target anyway, so that will get banked as soon as as soon as we get a bull move, that's going to bank automatically. And pound CAD is the other thing that may well bank today as well. Apart from that, everything else is just literally singles and doubles on pretty much everything at the moment. Just not doing anything, are we? So, but see if we can squeeze 5% out the week. That would be an absolutely brilliant week if I can get 5% out of this. But I don't think I'm going to get there this week, unfortunately. That would be a good week. Right. DAX has bounced. So there we go. So we're 240 down, look, on the DAX. The 30-minute ORB is now in place. So because that first, and this is the advantage of the 30-minute ORB. Again, it's one of those things. The 30-minute ORB should only be utilized if we haven't managed to crack the 5, 10, or 15. And we'll only usually get one of those on. So the whole idea is you're taking a range break that's decent with momentum. If it doesn't work out, let's have a go a bit later on this morning, because the markets at the moment have no directional bias. We haven't gone anywhere, literally. So reset. Now let's have a crack at that. Same with the FTSE. There was no 15, 5, 10 or 15 because it was all tiny, but the 30 we can take a crack of because, again, it hasn't gone anywhere. But if we had have gone somewhere on the DAX and the DAX had banked $500, we do not want to trade the 30-minute FTSE. And we definitely don't want to trade the 30-minute DAX, do we? Because we've made our money. So it's about this strategy for me is about trying to pick an amount of money that you're happy to make every day and hope that the EA can get you there. The problem is you don't want to limit your upside as well. This is where the difficulty comes in with this strategy, is if you get a clean break and it goes like the DAX went yesterday to 200 ADR. Yeah. Look at this yesterday. Bang. That's where the profit was taken yesterday on the DAX. That's where the DAX went yesterday. Trying to get that. And this is where your trailing stops come in. So what you were saying, Mark, about taking 50% off of it there, locking in a break even, and then using maybe 100% of the TP distance as a trailing stop. These days, you do want to milk it, but I want to milk it with a whole lot, not with half. This is the thing. So it's about trying to find that there's never going to be the right setting, because every day is going to break different and every distance is going to be different. But it's about trying to find that Goldilocks zone that suits most days in the market. We're trying to extract money out of the majorities, not out of the minorities. 200 ADR moves happen less than 3% of the year. Yeah, so this is something that will happen maybe 10 times a year, maybe. 200% ADR days are rare as rocking horse poo. Whatever, hen's teeth, whatever you want to say. But yes, trying to milk those days as well. That's what I need to do, and the only way we can do that is by analysing everything all in one lump sum. So that's the plan. Right, that's all those done. So this strategy. So what we're going to do this morning is there's a lot of interest in this yesterday in the live room. Quite rightly so, because look at the figures. This basically is the, if you like, the equivalent of my normal RSI mean reversion strategy on turbo. So this is basically just trading. If you don't know what this is, if you haven't been in the members streams before, or if you missed yesterday's live stream, this is the account. This is my demo account that I use to do development. So all of my development work gets done here. So I build all my EAs in this account. I do all my back testing in this account. So I do a lot of crap, yeah, in the account. And as a result of that, when I'm doing testing, what I'm doing is most of the time I'm just setting up EAs just to get into the market so that I can make sure calculations are working correctly and stuff's happening. Yeah, stuff's working as it should do. So what this is doing is basically on a 1 minute chart, it's using a 5 RSI, which is a really quick RSI, which is going to get extended multiple times an hour. So I want it to be trading constantly so I can see things happening. I can make sure that functionality is operating, all that sort of stuff. So I do a lot of testing on 1 minute charts. And it's testing this basically, taking these 5 minute RSIs and taking trades on the 5 minute RSI. And if the market moves 5% further as a percentage of ADR, it's taking additional trades. So as you can see, what it's doing is we're extended on the 5 RSI. We got a short signal using a moving average in this case, and then it popped off. So the next trade went in half an ADR apart. The next trade again will go in half an ADR minimum, 0.5% of ADR beyond that one, and it will just keep scaling in until it doesn't. Yeah. So there was an exit opportunity here, wasn't taken. Yeah. So 1 entry, 2 entry, came back down. I could have taken that off if I'd have been watching the dashboard at that particular point in time. I wasn't, so it's now in drawdown. But that's basically all this is doing. And, you know, it's not by accident that I do this, because I know this will work, because the market on the 1 minute chart is executing algorithmic trades on behalf of the banks and institutions. So it's basically the algos moving price up and down to execute orders within price ranges. It's balance. Yeah. So all the 1 minute chart is you're seeing your fine-tune diving into the balance of the market. And then there's a price discovery session. So, you know, markets are fractal. So everything that happens on the higher time frames happens on the lower time frames. It just happens faster. However, with faster means price action candlestick patterns are often less reliable, but they are also very accurate, because a 3-bar reversal, for example, on a 1 minute time frame means that the algorithm that was buying has finished its buy cycle. Likelihood is it will go into a sell cycle. The trouble is it's not really a reversal, it's just the end of something. So the movement that you get out of them, there's a great example. There's a 3-bar reversal there. Look, push, pause, pull. Yeah. The movement that you get out of it doesn't tend to get very far. There's another 3-bar reversal there. Doesn't get very far. Yeah. So it's great for testing strategy and testing functionality. If I wanted to test my mathematics on the wick sizes for 3-bar reversals, I can see loads of them within 5-10 minutes. That's why I'd use it. But what it's done is it's created a lot of interest, because I've been basically as far as you're concerned and I'm concerned and everyone's concerned, been taking trades at random on a 1 minute chart, basically just using movement up and down. So I've said if it goes up, sell it. If it goes down, buy it. That's all I'm saying with that RSI strategy. I'm using a 2 moving average, meaning that if price pushes up higher than the last 2 minutes, buy it. Simple. Nothing complex going on here at all. But what it's doing is it's generating huge profits. The reason being is that's all the market ever does, isn't it? It goes up and down. So it's worth investigating for a compounding strategy. And for those of you that don't know about compounding, I'm sure you all do know what compounding is, but compounding is this thing that's been flying around in trading since year dot, basically, which is your get rich quick scheme or grow your account quick scheme. And it is a thing, but it's not long-term sustainable. And that's what this account is. It's not long-term sustainable. And we'll do some back testing in a minute. I hope I don't prove myself wrong. And if I do prove myself wrong, everybody in here needs to sign an NDA and we will just keep this little secret for ourselves. But what I'm expecting to happen is it's just going to blow the account at some point. It's the same as martingale. What you're doing is you are using very, very high risk over a very, very short period of time. And with markets and strategies, if the market regime matches the strategy will perform. When the market regime does not match the strategy, it will not perform. Because you're using such high risk, when the strategy is performing, which is 70 to 80% of the time, you are going to generate very, very high returns very quickly. Yeah. So this is I can't trade proper size because I haven't got enough capital. I've only got 5K and I need 25K to really make this my full-time job. You can turn that 5K into 25K within a couple of months if you can find something that stays range bound for a couple of months and use high risk. You can 5x an account fairly quickly. There's a lot of people on YouTube doing this over and over and over again. If I set up 10 trading accounts right now and put a different strategy on each trading account and let them all run with 2% risk per trade, one of those 10 accounts in a month will have doubled the account. Guaranteed. Because one of them will match the market conditions. I'm using 10 different strategies with 10 different market conditions that they match. One of them's going to double. If I'm lucky, 2 or 3 of them might. Sound familiar? Prop firms. This is what everybody does on prop. Let's do 10 evaluations. Chances are 2 or 3 of them will get over the line if we take different trades, because by the pure logic of random probability, 50-50, some of them are going to win. Yeah? It's going up and down. That's all it does. If you bought the DAX on one account and sold the DAX on one account yesterday, guess what? You passed an evaluation. You also blew one account, but you passed one because it moved 200% ADR in one direction and it didn't turn around. Yeah. So compounding is something that does exist. I have done it many times. When I started trading 15, 20 years ago, it was all I focused on. There were spreadsheets, and I might even have one. Let me look in my magic folder. Trading. Let me just type compounding. There he is. I knew I'd have one somewhere. The compounding calculator. I don't know whose this is. But basically, September, this is going back to 2019, look, 2022, this one is. So all you're doing basically is you're taking some equity and you're setting a monthly goal and an amount that you're going to risk. And when you've achieved these monthly goals, you up the risk and you keep upping the risk continuously. And as long as the strategy works, it will continue to make this account grow. So this 300 grand here in September 2019, by the time we got to April 2022, had only done 1.5. It's 555K. Oh my God, this is when I was stock trading. Wow, this is a blast from the past. God, these are all my trades, look, back from 2017. Wow. Oh my God, I wonder if the screenshots still work. No, unfortunately not. This is my journal, basically, from when I was stock trading. One of my journals from stock trading. Wow, look at these. I'm going to have to look at this later. But anyway, so that's all my strategies. Look. Let's see. So this basically, all compounding is doing is basically taking an amount of money, and you use a percentage risk, a high percentage risk, over a period of time. And as long as the strategy works, you will double the account. So it's just a simple maths equation. So here, for example, we are using 0.05% risk. I can't remember which input to use. Is it that one? Yeah. Okay. I can't remember how to use this now. Monthly goal. There we go. Right. So risking 1% per trade with a goal of 25%. Yeah. This 300 grand account by month. So September, October, November, December. By month 4 will be 585. Near as damn it, doubled it. Yeah. So let's up the risk to 2%. And then our goal will become 50%. We then are doubling our account within 2 months. Yeah. And all you're doing is basically you're hoping that the market regime stays favorable for the strategy type that you're using for a period of time. And it's very, very quick and easy to double it. The problem is when you start getting up to these big figures, one of the problems is you ain't going to get the lot size on. Yeah. And this is where the myth comes from in compounding. Holy crap. If I took 30 grand and held it for 2 years and just did this compounding strategy, I'd have 1.5 billion by the time I get to retirement. No, you won't, because there's no broker on the planet that's going to take lot sizes by the time you get here, let alone here, and you ain't getting on 650,000 lots to take that 1-2% trade there, mate. Not going to happen. It's physically not possible to do it, right? But for small accounts, it is possible to do it. You can very quickly compound an account. Just see if I've got any other decent spreadsheets. No. Yeah. So with this account, for example, where are we? Here. This basically is, or was, it's 28 grand now. What was it? Let me, I haven't got the initial deposit on it. Oh yeah, deposit 20 grand. So this was a 20 grand account. It's now sitting at 28.6. So we're up nearly 50% on the account, basically, since it was started. So let's just adjust these figures in the EA. Oh. So there we go. So we're up pretty much 38.8% on the account. So all we're looking to do basically is use exactly the same amount of risk every single time we take a trade. So as the account is growing from 20k up to 30k, for example, the risk we were taking there is increased by 50%. Because you are increasing your risk exponentially as your account grows, the account grows faster. So a normal equity curve using a standard risk will do this. If you're risking 100 per trade, for example, if you're risking 1% per trade, your equity curve will go like this. Yeah, because the more it works, the more risk you have on, the more profit you make, the faster the accumulation on the account happens. So the goal of compounding is basically to take something small and make it something very big by risking more and more and more and more. So it's like every penny you win, you put more into it. Think of it like a business. I invest 100 grand in my business. I make 100 grand in the first year. I don't spend it. I tip that 100 grand in. Now I've got a 200 grand business. The 200 grand business is going to make more than the 100 grand business. Yeah. So you can't touch the money. But at some point, because you're risking high amounts of money, when that market regime changes and the strategy fails, it will collapse usually back down to nothing. So all we're doing is basically with this is we are going to control risk every day by basically closing out a amount of money. So what we need to do with a back test on this strategy is let's go down to 1 minute chart. Is basically pick a high risk. M1 RSI 5 there. So let's start off with, let's say, a 10 grand account. We're risking 1%. So the thing that's missing at the moment from this strategy that is running is the bit that I'm doing manually. So what we need to do to try and make this a fully automated thing that's going to just whiz through and try and double an account is we need to set some upside targets to take. The problem is it's going to be very difficult to do this on a single instrument basis. It kind of needs to be done on MT5 using multiple currencies, because the idea is we want to do this across multiples. But what we want to see is how long does it survive? How far does it go before it blows? That's the thing that we're interested in. So what is the rough amount of time that the thing survives? It's going to blow when it finds a parabolic move, which is usually an interest rate change or something like that. So closing out that Aussie New Zealand right now, for example, and then closing out half of that is what I'm doing manually just to keep on top of this and just continually grow that. Yeah. So what we need to do is, at the minute, it's just taking trades and it's not taking profits. We need to think of a profit target. So if we're using I'm using 0.5, am I? Oh, I've gone even higher risk now. Look, I'm 1% over half an ADR. That's going to be dangerous today. Exit targets, if we're using 1% risk, as a percentage of balance, we want to probably be getting out of all of these individual trades if we're making something like 0.5 and maybe getting out at 1, because it's a scalping strategy. We don't mind using a negative R, but we want to make a positive. Let's go for, we've got to compound it, haven't we? So let's go with 2 and 1. Let's try that as a starting point. We're not hedging. Drawdown control. So we are going to need to do some drawdown control as well. So if we get into 1% of drawdown, let's close out 50% of individual trades. And let's try that. Let's just quickly whiz through that on the pound US dollar and see what results we get there. So 21st of February 2024. Just run that as time frame. Now, bear in mind, this is the 1 minute chart. Yeah. So this thing could die instantly. It's all going to be about the day that you start this. If you start this on a day where the market goes like this for the next 6 weeks, happy days. If you start this on a day where the interest rates change, it's dead. Yeah, it's just going to die, isn't it? So let's just see what we're doing with the graph in a minute. So this is basically a 10 grand account. So we're up a grand, we're up 10%. We're up 20%. Right, now this is drawdown control being actioned because obviously we're going into a squeeze. So not going to work, not going to help, is it? So I think we need to have a cutoff somewhere where we basically say if we hit a specific amount of drawdown in the account, we'll stop. So we're down 2% now on the account. So this one's not working on Euro US. Let's just see how this ends up. This test is going to also take forever because it's the 1 minute chart. How many trades we're taking every day? This whole day from here all the way down to there that's 1 day. It's going to be a long test, isn't it? But this is something you can go and do yourself, obviously, and test and try yourself. Yeah, that's not going to work. So probably the drawdown control is what's killing this. So let's remove drawdown control for the minute and see if we can survive a squeeze without drawdown control. I'm just going to move this onto control points just to speed it up a little bit. And as we're using the 1 minute chart, we can use update on bar, not tick, and 1 minute. So let's just see how this goes. There's 10% gain, 20% gain, 25, 30%. Right, so we gained 30% on the account there, and we lasted 21st of February to the 8th of March. So that wasn't long at all, was it? That was literally no time at all. Less than a month. Yeah, so that's not good. We hit a brick wall on that one there. So let's move over and let's try spacing out ever so slightly wider. I don't think this is going to make any difference. And as we're scalping, we could try maybe a higher multiplier as well. So we're just looking to see if there's a way to quickly get that account up to double. 36% that time, so that didn't work out. So let's try, let's start in March instead. This is all going to be about when you start. That's the only way it's going to work. Immediately died, so that was the wrong time. I think this is going to be too aggressive. 50%. Ooh, that's closer. 50%. Yeah. So we took basically a 10 grand account. We got up to 15 grand in April. Less than a month. Yeah. So see what I mean? This approach does work if the market conditions are right. This is obviously, I'm picking out of thin air here settings to try. I've no idea what the best thing to do is. Obviously it's not that, but that took your account from 10 grand to 15 grand on one instrument. Bear in mind, we've got 28 instruments to pick in Forex. If you run this on all of the instruments, which is what we're doing here at the moment, obviously, and the market stays favorable for most of those instruments every day, 10% a day, 5% a day is very achievable, as long as you don't go into a squeeze. So if we were to do a 5 to 10% a day, for example, literally in 3 weeks, and every single one of these tests has lasted 3 weeks, isn't it? Within 3 weeks, you've probably got a double, haven't you? So let's have a look and see if there's a way we can maybe reduce risk a little bit. I kind of like that spacing though, that half on 1 minute. Might be too close. Drawdown control, we could close the entire position out rather than blowing the account when we get to a 2% loss. Let's try that. Also closing the whole lot at 2% and see how many of those trades, most of those trades hit 2% drawdown. Look. So you're always going to be in over 2% of drawdown, so that's no good. But it's not blowing the account now, is it? And we've done 6%. %. Right, so that's surviving now. So that's one step forward, isn't it? We're not dying. But we're not making money. We want something that's going to generate a bit of an upward curve, really, don't we? Obviously, that's not going to work. Let's look at increasing that to 5% drawdown. Let's see how many times we hit a 5% drawdown. Should really do a system parameter permutation test on this, but obviously on the 1 minute chart, an SPP test is going to take a long time, isn't it? Right, so this is telling me we're hitting 5% drawdown on a regular basis as well. The problem we've got now is we've got a negative R. So we're looking to make 2% return on the trades that work out, but we're looking to cut everything at 5% losses. So we've got to have a high strike rate on the strategy because we're running a negative R. We're only ever going to make 2% when we get an accumulation that works, but we're going to lose 5% every time it doesn't. However, that did increase the account by 7.5% at one point. So if you look at here, let me just pause this a sec. I can't because it's not on visual. But if you look at here, at that point there to that, it's annoying. At that point there to there, we were at roughly 7 grand and we pulled it up to 10,600. So that move there was 35% gain on one instrument. So if you started there, you had a 35% gain. One of the other things to bear in mind with this this type of approach is you need to watch your exposure. So you'll notice here, that I've got this running on Aussie CAD, Aussie New Zealand, CAD Swiss, Euro Pound, Euro US, Pound Odd, Pound US, New Zealand Yen, and US Yen. So I've got double coverage on the Yen, double coverage on the Pound, double coverage on the Euro, double coverage on the Aussie. I haven't got any. I think I've got one New Zealand in there. Yeah, one New Zealand in there. I've got two CADs in there, and I've got 4 US dollars. So it's overexposed on the US. From a number of instruments perspective. So if you pick instruments where you only go single direction as well, that can obviously be another advantageous thing to do. Again, this needs to be portfolio tested rather than individual currency. But for example, if I set up the Aussie dollar CAD to be long only, the Aussie dollar New Zealand dollar to be short only, that means that I will constantly be getting into Aussie and New Zealand into the Australian dollar rather, in both directions. So I will be hedged constantly on it, meaning that whichever way the Australian dollar goes today, we make money. Yeah. So it's about controlling the drawdown on the other pairs to a certain extent as well. So that didn't work out, that one. What else can we try on this? Again, it's going to be very difficult to make it work on a single currency. So that 5% drawdown, let's give it 10. And on the multi-trades, because we've got such a lot multiplier, let's go for 5%. And we'll go for 2%. I'm using 0.1. Oh, you idiot. That's way too much risk. I thought I'd... Why can't I... 0.5. There we go. I had 0.1, so I was risking 1% over 10% of ADR in movement. That's why I was using so much risk. So, right, let me just try that test again. Garbage in, garbage out. Very important to check your inputs. Mark, what did you post then? Were you going to say something about using a negative R? I didn't read what you said. Right, so we're up 30%, 38%, 57%. I had the risk way too high on that. Way too high. I put in a 0.1 instead of a 1. So we're up consistently holding there for a bit at 40 to 50% gain. Obviously, bear in mind this is a 1 minute chart, so we're not a lot of time is passing here. We're starting this test in April. We're up to July, April, May, June, July. It's only been running for 3 months, roughly. We're consistently holding at 40% gain. It was about your risk reward. I fixed it. All right, okay. Right, so sweet spot. Each of these steps you can see in the back test here, each of these steps down is a 10% loss. Yep, so each of these is a 10%er. So you can see that there's multiple times we're hitting that 10%, but in between we're recouping it all. So it's about getting the market conditions right long enough, and then when it's not right, controlling that loss. It's right. We got up to 80% gain now. Unfortunately, we've just taken a 30% loss in 3 big hits. 40% loss. Yeah. Accumulation, trend. Accumulation, balance, trend. Yeah. It's not going to work in a trending market. It's a mean reversion strategy. However, you run this with a trend strategy, all the times we're getting these, trend strategy should be running alpha. So 30%. So we're still up halfway through the test, but this is a much better example, obviously. So we found something, I'm just chucking numbers into this at random, basically, because that's all the market does is it goes up and down. So we trade up and down at random. Probabilities are you're going to make money at some point. Yeah. So this is holding. We got up to just shy of the double target there within 3 to 4 months. I don't know what that was, that figure. 191. So that's 91% gain on the account. We're getting close again, look. But this is one instrument, okay, with a 10% floating drawdown. So if you think about what we're doing here, we are risking 1% over 1 ADR of movement. Yeah. And we're saying you can move 10 ADR against us, yeah, in monetary terms before we take a loss. So in realistic terms, the reason these are happening is because the market is probably squeezing somewhere in the region of 2 to 3 ADR within a few days. So these will be news events, more than likely, which obviously are going to happen constantly. You're never going to be able to get out of them. So you can play around with this and come up with something that kind of you think works. The best thing to do for this, to be honest, is to download if you haven't got the MT5 version of Position Trader EA, go and download the demo of the MT5 version and do this in MT5 and use multi-currency testing, because you can test multiple currencies at the same time. And then you can set, but you can't set an overall drawdown on your entire account, unfortunately, with the Position Trader EA. But you can set it per instrument, but you'll be able to see what that equity curve's like. If you were to trade 5 or 6 instruments that all did that at the same time, this is when this works. And this is why all these guys out there, that's what I was saying yesterday in the live room, all these guys out there that run these channels where they charge you £200 a month to go and sit in their live room and they just pump out trades all day long, it's because they've got a strategy that will survive for a few months and generate a shed load of cash before this happens. They lose all their membership. They start again from scratch. They have advertised to a load of new people. They get a load of new people in. That's basically what it is. It's a rinse and repeat type business, but it won't survive long term. We're not looking to survive long term here. We're looking to grow something from an apple to an acorn. That's not right, is it? From an acorn to an apple tree, or whatever the saying is. I don't know what that saying is. But we're looking to basically make something grow fast so that we can then utilize that with low risk to generate consistent money. Yeah. And that's what compounding is all about. It's not something you can continuously do because you've got to pay yourself. This is the bit that people miss. Oh, I can compound an account from 50 grand up to 500 grand in 3 years. You can, as long as you don't need that 50 grand to pay yourself any money along the way. And there are no market collapses. We don't have COVID. Trump doesn't start World War III, etc., etc., because then it's all going to go down the pan. Yeah. So long-term compounding is called investment. There's banks and institutions that are way better than you at that. Let them handle that bit. Yeah. Or just buy the S&P every year. You're going to make 8%. Much easier. So there we go. So we're back down to 8 grand. So we've dropped all the way off because at some point market conditions went into a squeeze on the pound US dollar. So this is getting closer, isn't it? So this strategy there is an edge in it, obviously, because by definition the market goes up and down. Yeah, and all we're doing is we're waiting for the 5-period RSI. The last 5 candles worth have been long, strong strength. If we've had that, we just keep selling it after that 5-minute period and we wait for some downtime in the market. That's when we take and we pounce. So there's you will find there will be in here somewhere some settings. And as I said, the best thing to do with this, I think, is probably to run a 6-month SPP test on it. So run a system parameter permutation test for 6 to 8 months and run it on control points and just test. I mean, risk is testing different risks to see whether you should be getting in hard and fast or not. I mean, you can have everything based over 1 ADR because obviously as you increase your risk, it's going to make more money. So that's not something really you need to vary, but that you could vary your percentage risk. Your lot multiplier will be something to test. The distance between trades, definitely. It's 1 minute chart. Yeah, you don't want to be spacing your trades out a quarter to half an ADR apart. Yeah, it might only move half an ADR in a day. This is 1 minute. We need to be in and out 10, 15, 20 times a day. Yeah, so it's got to be very small movements. Your targets need to be tested for singles and multiples to see what the best thing to do there is. The singles, I think, are going to be less important because you're not going to make a lot of money on the singles. So with the singles, I probably would take that off because you're not making your money here on single trades. You're going to, I mean, you will be able to make a little bit. I mean, that is going to be one ADR of movement. So it's basically getting in, getting that 5-minute reversal on the RSI correct and it not turning back all day. This is where the money's going to be made on this one, the multi-trade, because if you look, it's getting into multiple trades often. We're trading the 1-minute RSI 5 movement. Yeah, it's going to be in very, very quickly into multiple situations. So this is the parameter permutation test to focus on, I think, is how much percentage should I be looking to gain out of each trade? Start with 1, maybe 1 to 5 or something like that to start with, or maybe 0.5 and go in 0.5 increments to 5. That's doubling the amount of tests. But the drawdown control, so we need to get out, we know we need to get out of everything at some point, because otherwise you are going to blow your account. But you could try it with that turned off as well. But testing drawdown levels from maybe, do I want to get out really quick, 2% or 1% even, and we know that's not going to work. 2%, we'll go in 1% increments up to 10. Try those different variations. RSI period, what should we use? Should we use the 5? Should we use the 10? Maybe try the 15. It's close to the 14 RSI, which is default on the 1-minute chart. That might help. 70-30 levels, we could try waiting for it to be extended even further before we start our initial entries. You know, there's a million permutations you can test, obviously. But those standard ones there, which is basically RSI period, what percentage should I close everything at a loss at? What should I target? And what multiplication and distancing should I use? And what risk? All of those permutations together. Let's start with a 0.25% over an ADR. Is just not going to make money fast, is it? Let's go with a 0.5% in 0.5% increments up to 2.5%. There's a lot of permutations in this. This test is going to be big. Let me just run it. Do you know what we can do with this as well? Because it's running on the 1-minute chart, I'm going to run this on open prices because if you think about it, we are trading on the lowest time frame, 1 minute. And most backtesting is kind of using 1-minute data anyway. So I reckon, you know, we're checking basically our profit targets every 1 minute. Yeah. Because we're doing this on the 1-minute chart. Normally with open prices, if you get a new spike like that, and if you're doing a test on an hourly time frame or a 15-minute time frame, the market could move up for 7 or 8 minutes and then come back down for 7 or 8 minutes on a new spike, and you check that candle there and that candle there. You miss all the interim when you're doing open prices because it only takes the open, high, low, close. When you're testing on tick or on control points, you're testing the time frame down or every single minute. So you get a much more accurate target. But as we're trading the 1-minute time frame, you could use open prices because we're going to check whether we've hit our profit target or our loss target every minute. The chances of a 1-minute candle making a huge difference, it's got to be a bloody big 1-minute candle. Yeah. I don't think it's going to make an awful lot of impact to the results. We'd need to test this, but I'm going to run this on open prices and just see roughly how long it's going to take to do this test on one instrument. And we'll see, I haven't set it to optimization. There we go. We'll see basically what sort of time scale we're looking at for testing on it. But as I said, on MT5, you're better off doing this. So it's 1,350 tests. This is 8 months, and it's going to take 2 hours on a single instrument. If you put together a portfolio of 6 instruments, making sure that you've got good exposure across all markets on 6 instruments, similar-ish to what I've got there, a couple of yens, a couple of US, a couple of euro, a couple of pound, a couple of Aussies, maybe some Swiss in there as well. That's all you're going to really need to do to put together a portfolio. And as long as each of the tests survives, you've got a good chance of making money. So far, none of these have actually worked. Oh yeah, so that one's worked. Not a lot of money though. It's made 800, so it's made 8% gain. Yeah, but this is what permutation testing is about. It's not about finding what is the best thing to do. It's about finding what not to do. So we know that using 2% or 2.5% risk is going to make a big loss. Yeah. However, we might find later in testing there's a 2% or a 2.5% risk that comes out that has actually made a load of money, and very easily, because what it's decided to do is use a 10% drawdown and scale in at 0.15 apart. So if you're scaling in at 15% of the daily move, once, twice, 3, 4, and you don't hit that 10% drawdown more than 3 or 4 times in the whole test period, there's a high probability you're going to get a very nice reward out of it, maybe using 5R. Yeah, so you've got to let the test run, see what the data comes out. There we go. We've got 28% return there already over 8 months. It took 32% of drawdown to make 28%. But the goal is not return on drawdown. The goal is doubling the account, isn't it? As fast as we can. So if we can find a similar setting across 4 or 5 different instruments and then out of sample test that, that is the sort of strategy I would look to try and run compounding. But you've got to bear in mind compounding is highly probable to blow your account. But it is also really, really good at growing it very fast as well. Like this. Yeah. Let's just see if we've got any more. I'm curious on this. Kind of sparked my imagination when I started doing this, because it's what trading's all about. And this is the thing that I love about it. I've been sitting here talking now for however long I've been talking, and this thing is sitting on 0.05% of drawdown, because this is what the market does. It goes up and down all the time. So I can bank some here, or I can leave it. But I could take that off and put 10 in the bank. I could take that off and put 5 in the bank. I can shut out. What have I just banked? Whatever I just banked. Where am I? 15. So take half of that off. There we go. So we're up 9 on the day. We've got hardly any drawdown. That's what it's all about, isn't it? But you need to have this done automated, really, on this type of strategy, don't you? I can build an EA for that to model it properly. Might be a good project. Oh, go. We've got one there, 32% gain. It's risking 1%. Targeting 3.5%. It is closing out at 2%. So anything that gets 2% into drawdown, it cuts it completely. Targeting 3.5% on the position using RSI 5. Using 1 ADR. What's the manual and once a day? They're not in my test criteria, are they? Multiplier of 1.3, adding at 0.05. So adding at 5% with a 1.3 multiplier, we got one there that generates 32% profit. But go and have a play. We're going up to 34% now. We've only done 42 tests out of 1,300. So the other thing, obviously, you've also got on this. Let me just stop this 1 sec and run this on the 5-minute time frame. Just want to see how long this test takes. I'm guessing it's going to be 5 times faster. So that was 2.25 hours. So let's just see how long it takes on the 5. Yeah, 44 minutes. 30 minutes. Yeah, so this is going to take roughly 30 minutes on the 5-minute time frame. Obviously, I'm trading M1 here. M5 accuracy for exits on M5 on open prices is obviously going to be 5 times less reliable, because we've got 5 candles between each open and close, whereas we just had 1 candle between each open and close. So you might find the accuracy of the results is a little bit more woolly on open prices there, but 32% return is a much faster way of getting results. 32% return there with a 23% drawdown, risking 2%. That's scalping. That's interesting. So position target on that is 0.5. So we're saying we're going to get in, we're going to risk 2%, we're going to go for a 0.5% move, 0.5% target, but still getting out of 2%. That 2% seems to be, that's because that's what it's testing first, isn't it? 34%. So yeah, so that might be an idea to test it on 5 minutes. So anyway, there's one for you to play around with. So, you know, for those that want to try and build an account fast, there are ways to do it. But as I said, this is a test better done in MT5 using portfolio. I'm coming to the conclusion. Oh, there we go, up 0.21%. Look. Let's close out that euro pound. And let's get rid of some DD. Give it half of that. Okay. Up 2.24 on the day, 0.25% done this morning. Sitting in 0.9%. It's brilliant, isn't it? Going up and down. What was I going to say? Can't remember. Yeah, I'm coming to the conclusion. The more I'm building this dashboard, and this dashboard's been a bit of an eye-opener, to be honest. The more I've been working with this dash while I've been developing it, and the more I'm seeing what's happening, it's just an amazing visual tool to show you intraday what is happening on your account. The more I'm seeing profit opportunities disappear on so many strategies that I run, and backtesting as well. When you look at backtesting, and when I'm doing drawdown control on a regular basis on my accounts, I see so many opportunities for profit now flashing it at me like this and then vanishing. So there's a number of these that were green over the last week that I've let run back into red, that should have been taken and used to get rid of these that have remained red all week, but could be a lot less red than they are. Yeah. And I'm looking to try and off the back of this dash, try and develop an algorithm to automatically close, and I may well include it in the dashboard because the logic is kind of there. We've already got the logic that knows where the trades are that will improve positions. It knows where the trades are because it's highlighting them red and green that are in advantageous positions and disadvantageous positions for you. So there's an easy option to create an algorithm that will highlight stuff that makes 5% or 1% or 3% or whatever you want to set as a figure, and then automatically highlights everything that is going to be the opposite of that and remove half. So every time it banks, it does DD control. And the only way I can properly test this is in MT5, because the only way you can properly multi-currency trade at the same time is MT5. Data's not as accurate. However, it's not about accuracy of data, is it? It's about the logic involved in doing continual DD control on a portfolio of trades. Yeah. And then having a output, which is what I want, which is what's the max that we ever saw. And that becomes your line in the sand where you go, screw it. So if you've been trading with me for any period of time, you'll know over the last 18 months, I've had two big drawdown issues with yen and oil. And both of those I cut at somewhere between 9 to 11%. And that is my personal line in the sand. If I see something on my portfolio getting to 9%, anything over 5% is where my alarm bells are starting to ring loud. Yeah. When I get to 9%, that's when I go, screw it. And what I'm looking is every 2-3 months, maybe, I'll have a position that gets there. And what it does is it takes away roughly 50% of the previous month's profit. So I'm not losing, I'm gaining overall, but I'm letting the trades breathe, but I have a line in the sand. This is where other people go, oh, I tried that, it blew my account. It's because you didn't have a line. Yeah, you can't just assume that this is never going to take losses. Position trading takes losses all the time. It's just we don't take them every time we get the trade entry wrong. We take them when the market proves it's gone into a parabolic move that we had no way of predicting. It couldn't predict. We just happened to have the wrong entry on at the time it decided to do that. That's random, yeah? So we have to take our losses at random, but you need a line in the sand. And that's why the Position Trader EA has that max loss in there, is because it can be automated to say, if you see 10%, just get me out. I'm done, right? So by doing this in MT5, we can run tests to find out what the maximum portfolio drawdown was, the maximum individual currency drawdown was, and what the maximum individual trade drawdowns have been. And then we can set parameters to deal with those using other elements that are making profit along the way. The problem is every time you do something like that, so I take this one here and I close out this $19 and I close out this $25. I then got this one here with multiple positions on, so I'll get rid of that and I'll get rid of that, and I'm up now 0.38%. What I've just done by making those decisions is I've completely changed the timeline in the future. What if I hadn't have done that? Would my P&L have been that, or would my P&L have been that? So when you're doing dynamic testing, and this is one of the reasons I don't like MT5, and everyone says, oh, it's way better, because they don't understand what it's actually doing, is the reason I don't like this approach in MT5 is because what you're doing is every time you have something that acts dynamically on a portfolio, you haven't just got that one currency's movement. You've got a combination of currency movements generating 4 times the deviation on what would potentially happen in the future. If you test on 10 different currencies, you've got 10 times 10 deviations in the future that you cannot predict. Therefore, the backtest results are way less likely to repeat themselves. If you have one instrument that you test over 4 years with 3 permutations in the strategy, and it produces 3 different equity curves that are positive, you test that again in another part of the past, and it gives you the same 3 equity curves at different levels of profit, but all generating alpha, you win. The chances are, when you put this into the future, one of those equity curves will be reproduced. If that equity curve, all of these equity curves, was affected by 3 other equity curves, all having influence on the decisions that this equity curve made because of these equity curves that are running here, all with 3 system parameter permutations on, you get to the point we're multiplying multiple variations of what could have been to create multiverses in the future for potentially what could be the outcome of our trading strategy. So while this has a really useful test to do in MT5, the results that you're going to get are going to be so cherry-picked, it's not really going to be usable. But it will hopefully identify what worst-case scenarios are and what best things to do are, i.e. what isn't good to do. So scaling in a quarter of an ADR apart, running a portfolio, isn't a good idea, because on large exposures on single currencies, you blow the account. So if we go to 1 ADR distancing, there wasn't an instance on any of them that blew the account. So all that tells us is we don't want to be too tight, we want to be loose. It could be we want to be tight because we want to be out fast, we don't want to be loose. But it will tell you roughly that sort of information, but it won't be able to tell you exactly what to do. So saying that I want to get every trade that hits 0.25% in profit banked immediately, and anything that is negative 0.25% or more, I want you to shut out a quarter or a half of it, depending on how big it is. How does that keep our drawdown? If it keeps our drawdown low, that's what we want to do. If it doesn't change our drawdown and it keeps going up, that doesn't help us. So what if we said, let's go here and then only act on ones that are half as big as that and close half of them out, i.e. close a quarter, use a quarter of our profit, for example, or a third of our profit? Does that affect the drawdown? And that's what it's about. It's about staying on top of drawdown in portfolio, isn't it? So these are all tests that I'm going to do. And this has only really come about since I started building this, and I've been looking at what goes on. Yeah, and intraday, you don't tend to stare at your P&L intraday. This is something that now is making me stare at my P&L. I'm seeing things fluctuating more now from like 1% to 3% over and over and over again, and I'm thinking that's going to disappear. So what do I want to do with that? I want to use this to get rid of some of that or some of that. So it's 74. So it's only going to leave me like 40 odd maybe that I could use. So 40, 80, 160. So if I close a quarter of that out and that out, I'm helping this position get closer to average, giving me a faster exit. I'm reducing my overall lot exposure on the pound US dollar, so I'm less exposed to pound and US movement. In fact, that's the one you want to do, isn't it? Because the pound has got very little exposure on it. So I want to work on the pound, and the CAD that's the one I want to take some off. Yeah, it's brilliant, isn't it? How this highlights and identifies in such a clear way what you want to do. You know what you want to do. You want to use the profit. You want to use Peter to pay Paul. That's the way it works, isn't it? Yeah. But I can see that that's the one I want to work on because of my exposure. Because that's telling me that I've got no issues here. I've literally got hardly any exposure on the pound. But my exposure on the CAD is quite high. It's not quite high. I'm hedged. But I have some exposure on it. Yeah, I'm hedged 100% on the pound. So it doesn't matter what I do to the pound, does it? Great. But I'm going to try and build this out as an EA. But anyway, go and play. Yeah, I mean, this what I'm doing here is not rocket science at all. But don't be under any illusion that it's very high risk, which is what I think some people were getting very excited about yesterday in the library. Like, oh, he's found it. Look at the money he's making. No, I'm not. I'm pressing buttons at random and taking money when it's there. It's just been going up and down. So more wholesome, not sure if that's the right term, portfolio manage. Take profit when available and do overall DD control early to avoid reaching pain levels. Yes, that's what I used to do. So the guy that taught me position trading, which was a course I did, he's gone now. I don't know, he's disappeared a long time ago. But the guy that taught me, it was a DCA course, basically. I can't remember, it was called DCA Advanced or something. But it was basically a dollar cost averaging course. And he was an ex-banker, funnily enough, which is why he trades that way, or used to. But what he taught us to do was every single time you close a trade, you do not close it unless you have the opportunity to use 50% of the profit to offset against a loss. Yep. So that was the rule. That was one of the rules. And it's a good rule. Yeah. But what it means is you have to have enough profit, which is double your easiest drawdown, if you like. Yeah. So for example, I've got 11 here. I can take 50% of that off to give me 6. Now I can't, because that's 12 and that's 9. But I could use that to pay off half of that now. Yeah. So that was his rule. And what it was designed to do was keep this under check, which sounds brilliant. However, when everything goes into drawdown at the same time, what you're doing is you're not banking much money and you are taking a lot of drawdown. So I came to the conclusion after doing quite a bit of testing that it actually is better just to take the profit and then wait and see what happens with the drawdown. Because if I take this off now, there, at $9 or whatever, within the next 10 minutes, this could be sitting at $26 in profit. So what I'm doing is I'm using 50% of my overall gains to remove potential future profit. So I manipulated the strategy to, and he was using the 5-minute charts to trade. He was an intraday trader on 5-minute charts. So it made sense on a 5-minute chart to do this constantly. You want to be, it's highly labor intensive. It was all done manually as well. So it's an absolute pain in the backside. But the reason he was doing it was because it was 5 minutes. So I said, well, let's look at the time frames I've been trading with my mentor at the time, which was hourly and 4 hourly, and let's move this onto the hourly and 4 hourly charts and look at the average ranges it moves at, and let's not get in quick. What that allowed me to do was see intraday movement up and down, generate profit on everything at some point. So there was no point in taking losses in the day, intraday. You only take losses if you have got a couple of days where it goes against you, and then you use the gains from the week so far to control those losses. So rather than taking constant losses over and over and over again throughout the day with your constant profits to generate a constant pot of increasing cash, wait and see what hasn't worked today. Because if it all works today, you're just giving away 50% of your daily profit. So tomorrow, if I've got a load of drawdown, if I've had 2 or 3 days where it's gone really, really well, I will use a percentage of that to control what's open. And that's how I teach drawdown control in the bootcamp. Yeah. Not on a trade by trade basis, but that is how I was originally taught to do it. And that is how it is done with the algorithms, basically, in banks. And that's how they are taught to do it, because they're not trading as we are. It's not their capital, and they can move price. So it doesn't matter, does it? Yeah, if you've got a bit of drawdown on there, you want to keep on top of it. But at the end of the day, if it goes too far, you can just pull it back. You phone the market maker and go, got any CAD? Yeah, how much you got? 2 million? Let's dump it in now, will you? Pop, thank you, done. They don't have that problem because they can make the thing move where they want it to. We can't. So it's a slightly different approach. And I think that's what he found when he came out of banking, was obviously it's a great strategy and it still works. But he's lacking the shotgun that can be fired whenever he needs it fired, which is what the FX desks have. This is why if you go into a trading floor in a bank, you'll find the FX desks very close to the market maker desks. It's all the same bodies, if you like, the speculative desks and the manipulating desks. Speculative desks, it makes sense to know what they're up to, doesn't it? Because if the market is going to get pushed up with a 200 million order from Microsoft, should we long it? Yeah, probably a good idea, isn't it? Because we can generate some capital on top. We don't have that luxury. So yeah, that's basically the logic. When you partially close a position, it might be a good idea to consider the entire positions for the next trade multiplier, and not only the last opened. From a from an in I don't know, not quite sure how that would work. Your lot multiplier is based on the symbol positions, not on the entire portfolio. If you look at the entire portfolio and it goes against you quickly, that's going to get very big very quick if you're multiplying based off of that. Is that what you mean? I think that would get rather out of control quick. You can't do it on individual currency because you can't adjust it. Not the portfolio, but the pair. What, on the total lots open? You could test that with the position trader EA. Could you test that with a position trader EA? Cool, I've done 991 tests while we've been waffling. Look, how many we got? 84% gain with a 33% drawdown is the max. We've got quite a few 80% gains in 6 months. One instrument. Yeah, we got 28 plus gold, indices, whatever else you want to trade. Yeah, so this is just one instrument that's generated 82% return. So I was going to say you could test that. So you could use because aggressive drawdown control works. This is going to use a stop loss every time. This is the problem. No, you couldn't test it in here. Because what you could do is use aggressive drawdown control, which obviously opens a position as a percentage of your total lot size based on drawdown. So when you get to 1% in drawdown, for example, you could say use a 1.3 multiplier of the total portfolio position, or 0.5. But what it's going to do then is going to start placing stop losses on these positions. So it turns itself into a stop loss strategy. I mean, it might work, but there's no way of removing the stop loss in a position trader EA. The other danger with that is you're going to get very big very fast, aren't you? Size-wise, it's going to exponentially increase quite dramatically. Where are we? This one. So it could be a bit dangerous. It's something I could build a test for, though. Off topic, how are the issues with MQL market going? I don't know because they don't say anything. I can't get this version up onto the marketplace still. This new version of the EA. Blah, 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 blah. I need to find it. Where is it? In here, isn't it? I'm just going to retest it this morning and just see if they fixed it. But I doubt it. Oh no, we'll test it. But yeah, there's still no update. I'm wondering because tomorrow, if we've got a new version of MT4 coming out for the first time in a long time, which is worrying me a lot. But they're releasing a new version of MT4 tomorrow. So your terminals will be pushed to auto update. This is tomorrow. Friday the 21st of February. I'm wondering if they've rolled out an update on the marketplace that means that anything that's not compiled in version 1440 won't go up, which is why I'm having trouble, because obviously I can't compile in the new version because it hasn't come out yet. Although I think there is a that's MT5. MT4 build 1436. When was that? 19th of February. Yesterday. Oh, okay. So I might have the new build. So yeah, I'm wondering if that is the issue with the marketplace. Either that or they've tightened up the something. There we go. So this is what I get. Look, right. This is the quality of the MetaTrader error reporting system for developers. Okay, so these are all the previous versions of the Position Trader EA. I've just tried to upload version 2. Validation failed. This is an automatic validation system. So there's no human beings. You can't talk to anybody. It just fails. Oh, really? What's wrong? Tell me. Test on the Euro US dollar H1, there are no trading operations. Test on the New Zealand dollar US dollar H1, there are no trading operations. The same for the pound US dollar. For gold, there are no trading operations. Oh, really? When did you test? What time period? What were you doing? What inputs did you use? There was no trading operations. That doesn't help me. Oh, okay, so there's a link. I'll click on the link and see what you recommend I do. Here are all the runtime errors that could be related to the problem of you not uploading your product onto the marketplace. Cheers for the help. That's what we get, right? So I've got however many 100 error codes. I could go through from number 1, no error returned. It's obviously not going to be 1 or 2 because there's no error returned. But it could be the good old common error, which is a really good one. When it returns error code 2, it's a common error. It's very common. Nobody tells you what the common error is. This is a standing joke in the community. Oh, I've got a common error. Good luck. It's not going to happen. It just means there's something wrong. What? Doesn't give you any information. So that's basically what I'm up against. I get this error report that says there's something wrong. I go, Thanks. Do you know, there's 38,000 lines of code in here. Which of the 38,000 lines is wrong? And the other thing is, yesterday, I went, all right, fine. I will rename version 1.8 to version 1.9. Okay. And I'll upload it again. Same error. But it went up absolutely fine in November 2024. But now it's not working. So it's not the EA, because the version 1.9, the only difference in version 1.9 is at the very first line of code, it says a 9 and not an 8. That's the only difference in the code. One character, which is a 9, not an 8, because it won't let you upload 1.8 because it's already got it. So I have to make that change in the code, right? And I've uploaded the same thing, which passed, and now it doesn't. So there's something wrong, and it's nothing I can do about it, because the report is bloody useless. The old version I can't upload, so if I did want to change it, I can't. And the human beings go, I'm afraid automatic validation is automatic. If you do not pass the automatic validation, you will need to look up the error code. Which one? Because I test it just to prove. Position Trader EA, you probably can't see it. Version 2, I just tested it in front of you, live. Nothing wrong with it. It's taking loads of trades. Pound US dollar. Look, pound US dollar. It does work on the 30-minute time frame, right? Is the one they say it doesn't work on. 30 minutes. If I did this, right, and it didn't take any trades, it does trade. You can't say there's no trading operations. There's bloody loads of them. Not profitable, but that doesn't matter. What it's saying is it's not trading. It's not going to work with this setting, is it? It's scaling it at 0.5 apart. It's never going to work. But anyway, so that's my problem. I can't do anything about it, unfortunately. So yesterday, I spent the last hour or so of the day building my licensing system into version 2 and testing it, and it works. So I've got two options. Option 1 is to wait and hope. And this is not the first time I've come across this problem, this issue. This is something that happens regularly. There's something not right about there's just something not right with this anyway. Sometimes you will push up a product, right? And it will pass first time. And then you'll literally change a word. A spelling mistake is a great example. Someone will go, you've got a spelling mistake in your input. So I go, change the spelling, upload it, failed. What do you mean failed? It passed a minute ago. Literally, I uploaded it this morning. This afternoon, I've uploaded it, and now it's failed. It's done the same tests, same time frame, same instruments. Yeah, and you do that, and I've done this for a day, and I've gone, I can't fix it. And then I go back the next day, upload it, and it goes, passed. Random, totally random. But sometimes I've come across this, and it's been a week, and I can't get the thing up there. And now the problem with PayPal, you can't accept PayPal. They won't accept PayPal. They won't pay me with PayPal either. They used to. They're not accepting certain credit cards anymore. So there's all these payment problems that people can't pay. So I thought what I'll do is I'll set up on my website. I'll just chuck WooCommerce on there, and I can set all my EAs up as all my products up as products. And literally, I will just take payment. I will use my own licensing system to license it to individual names and account numbers. So everyone would just give me 5 account numbers. If you haven't got 5, you only got 2. Fine, you give me 2, give me 3 later, whatever you want. But your name is not going to change on your trading account. My trading account name is Lee Sampson because that's my name. Your name is not going to change, so I can verify the name. I can verify your account ID, which is your broker ID, which you can change, obviously. And I can license it all that way and do it myself. The problem I've got is I have no idea who's bought anything because they don't give any information on who buys it. What you get is an order number, a product. That's it. They only give you the date. They don't even give you the time. So I can't verify who's bought what, which means if I push out version 2 and go, here you go, everybody, this amazing product, you can buy it on my website. They go, Can I upgrade to it? No, you can't. You can't prove it. You can't prove you bought it. Everyone can Photoshop, but I have no customer base either. And I haven't got that many customers, obviously, but you know, I'm not selling tens of thousands of products a month, but I don't know who's bought anything. Obviously, I know most people have bought something because they're doing it every day. But I've got no way of validating any previous purchases. So it's a case of I've got to make a decision to either dump this thing that breaks all the time, can't pay. Sometimes you can, sometimes you can't. Sometimes it works, sometimes it doesn't. Sometimes the marketplace is down. People say, I can't get my indicator onto my chart. Yeah, the licensing system is down. All of a sudden your indicator is removed from your chart. Why? What's going on? I can't validate. You go onto MQL5's website, it says error 500. Yeah, because the site's gone down. So I'm fast becoming like fed up with trying to deliver what I do through this thing. But it's starting from scratch. You know, if I update an EA or an indicator, I don't know who's bought it. So I can't say, yeah, here you go, here's the updated version. You've got to prove to me you've bought the thing. Yeah, scammers can do a Photoshop very, very quickly and easy of a receipt, but I can't verify who you are. So I'm stuck between a rock and a hard place at the minute with this thing, really am. But there's nothing wrong with this EA. It works absolutely fine. There's no errors in it. I compile it, and when you compile it, you get a list of errors, you get a list of warnings. There's none. None of these are in my compilation reports. So I can't fix them. If it was that, I can fix it. If it's this, I can fix it. It doesn't tell me what's wrong. And literally nothing I can do. I literally can't do anything. But anyway, let's look at these optimization reports quickly before I go. I'll just see what we got. 84. So ADR risk 2, position target 0.5. So scalping really fast on the 5-minute time frame, going for 0.5% target and risking 2% over 1 ADR. So we're risking 2% over 1 ADR, which means we're looking for 0.25% of ADR movement. So basically what it's saying is intraday, scale in close together and get out when it's moved 1/4 of an ADR. So as long as in any day you get at least 1/4 of an ADR wick within the day, that will generate 84% return. That's very, very simple, isn't it? It's not many days you don't get 1/4% movement up and down, is it? Yeah, 1/4 of an ADR. There's not many days that doesn't happen. Drawdown control max 8%. So it's saying you need to let your trades run 8%. We're risking 2% over 1 ADR with the first trade. So that will be hit probably intraday, maybe day 2, depending on price action. Using RSI 5. That's it. 1.3 multiplier and a 0.05 spacing. That hasn't done a full test, is it? I don't think that optimization has done everything it should have done. Oh no, I wasn't testing the distance or the multiplier. Well, that's why the test was fairly quick. I thought it might be a bit quicker, a bit longer than that. So ADR wise, RSI wise, RSI 5. Let's see what the best RSI to use is. Intraday. You want to use fast, obviously, intraday, because we're trying to get in and out within hours. 5, 10, 15. They come up at the top. So 10. Let's sort this by profit factor, which is return on drawdown, and see what we get. Okay, so return on drawdown wise, best things to use are 0.5 ADR risk, 0.5% risk over 1 ADR, maximum of 10%, 3%, 2%, 8%, 5%, 9%, 7%, maximum is absolutely random. But using an RSI 10 or a 15 comes out of the top. Low risk. So 0.5% risk. So small risk, big reward. So we're getting in with a 0.5% risk over one ADR. And we're looking for anything between 2 to 5% return on multiple positions. That's the optimal. It doesn't matter about your risk for some reason, which would indicate to me probably that you're not hitting that very often. Let's run that. Let's just run that test. This generates a 45%. Let's go with that one. Yeah, no, let's go with that top one, just out of interest. 45% return off of a 16% drawdown that returns. You sure about that? Oh, it's on M30. Idiot. I don't think that's loaded the settings in. No. Let me just change that again, because I changed it. That's not right, is it? Something not right there. Just let that run a minute. Something changed on their end? Yes, definitely. Maybe the auto validation set on true, the button only trade settings, and doesn't press any buttons. No, it's not that. I've tested that. When I've come across this problem in the past, I've done lots of different changes to code and inputs. So I've done things like completely hiding the input for button trading mode so that it doesn't exist. I've removed all of the code blocks for button trading, and I've done it again, and it still didn't work. So then I've been through the process, and I'm not the only person. There's forums full of people having very similar problems, and there has been for years. But everybody goes through the same process. It's like, if you're not going to tell me what's wrong, the only thing I've got is finding that needle in that haystack, and the only way I'm going to do it is to remove everything straw by straw. So you remove every function. It's validated, right? So it's that function. Okay, so let's put that function back in that I just removed, that failed and then passed. And then it passes with that function in it, and you're like, but a minute ago it didn't pass. Let me remove it again. Failed. Passed. Passed. What? Failed. Hey? That's what you get. Literally. It's like it's at random going, don't like him today. Oh, he's all right now. That's literally what I feel like. And to be honest, I'm fed up with it. But it's not just me. Something's wrong with that test, isn't it? Look. That generated 4,500 profit, 45%, with 57 trades. And that, for some reason, is giving completely different results. That's not filling me with confidence very much. There we go. That's better. So that drew down by 30%. 36% to make. Am I going mad? Have I changed the setting? I haven't. Have I changed something without realizing it? Don't know. Anyway, I need to run that test again because it's not running all the variables I want. But that's weird that it's giving me different results now. 8% drawdown on that one. Weird. I think you're right. It has something to do with the update tomorrow. Hopefully, yeah. I think you can compile MT4 in Meta Editor 5, MQL4 in Meta Editor 5. You can. First thing I need to determine is whether or not this is related to the new release or not. If the new release comes out tomorrow, I download the new release, I recompile it, there's no errors, and then I put it up here and it still doesn't work. It's not the new release. So I don't really want to spend too much more time bashing my head against a brick wall with this thing until I know what what the problem is. Yeah, because I could spend a whole day figuring out something and it still doesn't work. I'd rather just wait for them to release the new version so I can get hold of it and compile it. There is a new version I've got available I can get, but I'm not sure that is actually the one. So and I'm always wary about there's a Telegram channel basically called MetaTrader Archive, and you can download any previous version of MetaTrader. They always have the latest releases of MT5 before they're released, and it always worries me. And I never download them because if you've got the latest version of MT5 before it's been released, you've obviously cracked it somehow. If you cracked it somehow, what am I putting my code into? So I never download them, but they've got the latest MT4 release. It's not out yet. So bit, I don't want to jump the gun. Anyway, right, I'll leave it there. So yeah, go and play around with that if you fancy it. This is weird that I'm getting the wrong results, different results to the optimization test. Something not quite right there, but anyway, I will have to do some testing on that. But I think it's something worth pursuing anyway from a portfolio perspective. For quick account growth, but also for prop. So for prop specifically, this approach I think is something that can have a lot of benefits. There you go. I'm sitting on 100 now. Let's shut that out. That one's worked. That one's worked. Shut that. That one's single. Shut it. I mean, I'm not looking at where price is at all. I'm not interested. I don't know what's going on. I don't know where price is. I don't know where RSI is. I have no idea how much movement we've had. I know nothing. What I'm looking at is profit. It's there. I'm taking it. Let's do a bit of DD control on that and a bit of DD control on that. Up 0.87 on the day. If I'm looking to make 2%, as soon as that number there gets to 0.13, I'll shut all of the lot and walk away. That's it. Done for the day. Brilliant, isn't it? But individually, this strategy, if you run this strategy that I'm running, this exact set file now on the euro pound, I'm pretty sure it will go pop very quick. But I'm not giving it a chance to go pop because I'm grabbing money as it's there. I'm just literally banking money. That's what trading is, isn't it? It's about making money, not about letting your strategy play out. It's about getting this figure where you want it to be each day. Anyway, anybody got any other questions or anything? I don't know how many people are here as usual, but I know some people are because you're talking, which is always good. But yeah, so we'll see how we go. This afternoon, obviously, be aware we've got unemployment claims coming out. It's normally on a Wednesday, but it's Thursday because of the bank holiday. So that's coming out this afternoon. May get some movement off of that. But I would suspect we're more likely going to move off the back of Trump than we are off of that. So just be aware of that volatility coming through. That won't do anything because that happened yesterday. And then tomorrow morning, we've got retail before I come on tomorrow morning, and it's PMI day. So masses of volatility coming tomorrow as well. So there's a potential for a decent amount of movement. There you go. We're down 450 at the minute. But I'm pretty sure at some point there, that figure would have been a lot less. And I already had like 250 I could have taken this morning, but gone. If this thing now comes down to here, does that, takes that out, and then does that, and goes up 200 ADR today, I am no longer using stop losses for this strategy. I'm just not going to do it anymore. Drives me nuts, stop losses. Anyway, I'll be back tomorrow. Anything you need, let me know. I'll be in Discord. If you've got any findings, put them in the members group for testing. If there's anything you want testing as well, specifically to try, I can either modify the position trader EA by just getting a demo version and ripping stuff out, changing stuff, removing things, and I can manipulate it basically to test specific scenarios. If there's something you find that you think, oh, that sounds like a good idea to test, let me know and we'll test it. Or I could build a quick EA to test something. So if there's stuff that you think you've got an idea on, either to do with portfolio trading that I could possibly build into the dash, obviously as well, let me know, and we can test more stuff. But if you've got any findings that you find from back testing in this type of thing that you want looked at, obviously let me know as well. Euro New Zealand has closed out, by the way. So that's hit. That was the one that we were looking for an exit on bullish movement, which we've got. So remember I had the zone drawn down here and I was saying next bullish candle I'll get out. I'm out. There we go. So that's banked as well. So it's 0.5% for the day. Again, not going to do any drawdown at the minute. I'll wait for the unemployment claims to come out, but this pound US dollar is going to need some attention soon. So we'll watch that one. All right. Have a good day. Anything you need, let me know. Other than that, I will see you next time. Have a good day.